Kelly runs a small business as a sole trader, selling goods to the public. She also works part-time at a law firm. For the tax year, Kelly had salary income, net business income, and earned interest from cash in a bank account held in the name of her business. Her business also earned interest from customers due to extending credit terms. Kelly's deductions relate to accounting fees for a registered tax agent to prepare activity statements for her business. Some small businesses with aggregated turnover below the relevant threshold are eligible for the small business income tax offset. This non-refundable tax offset potentially applies to sole traders and taxpayers that receive small business income from a partnership or trust. However, it does not apply to a small business run as a company. The small business income tax offset is set at a predefined rate, which is applied to the proportion of tax payable on the taxpayer's business income. However, there is a maximum entitlement to the offset. The formula for calculating the small business income tax offset looks at the proportion of the taxpayer's net small business income as compared with their total taxable income for the year, and multiplies this proportion by the taxpayer's basic income tax liability. This result is then multiplied by the small business income tax offset rate. The basic income tax liability is the taxpayer's tax liability before taking into account any offsets, and it does not include the Medicare levy. For the purposes of the offset, total net small business income is defined as assessable business income from eligible business activities, less deductions. The net small business income includes normal business income, as well as interest or dividends received in the course of conducting the taxpayer's business. However, the net small business income does not include any net capital gains made by the business or personal services income, unless earned from a personal services business. It also does not include salaries, wages, allowances, or directors' fees received by the taxpayer from their business. Importantly, it also does not include interest and dividends unless they are related to the business activities. When calculating the net small business income, note that there are also some amounts that cannot be deducted. These include tax-related expenses, gifts, donations, and personal superannuation contributions. Other amounts that cannot be deducted are current tax losses that are not deductible due to the application of non-commercial loss rules, as well as most prior year tax losses. In Kelly's case, the first step is to calculate her taxable income. This will be based on her assessable income from the various sources. Kelly's deduction for tax-related accounting fees will decrease her taxable income. The second step is to use the taxable income to calculate Kelly's basic income tax liability on her taxable income. The third step is to calculate the total net small business income for the purposes of the offset. This includes the net business income and the interest from customers. However, her salary is not included, and neither is the interest from cash in the bank, as it is not related to the business activities. Further, the deduction for tax-related accounting fees is a disallowed deduction for calculating the net small business income. The final step is to apply the predefined offset rate to the amounts previously calculated, as per the formula for calculating the net small business income tax offset. So we can divide Kelly's total net small business income by her total taxable income, and then multiply the result by her basic income tax liability. We can then multiply this figure by the small business income tax offset rate, which will be limited to the maximum entitlement. To recap, the small business income tax offset is available to unincorporated small businesses with aggregated turnover below the relevant threshold. The offset is non-refundable, has a maximum entitlement amount, and is based on applying a predefined rate to the proportion of tax payable on the business income. It is important to accurately calculate the total net small business income for the purposes of the offset, noting the income and deduction items that are included or excluded. This amount together with the taxpayer's taxable income and basic income tax liability figures, can be used to calculate the net small business income tax offset.